Is this the start of a 2020 huge market crash? Long story short, no, it's not. It's not even close. But you're not here for a short story, are you? You're here for the details. So let's get into it with our favorite global macro research and consulting firm, Macro Ops. Of course, you know we got a report about this. Now, fair warning, this research is for our professional clients who are all money managers. So it gets into the weeds, but I'm going to try and simplify it as much as I can for you. And if you have any questions at all, or if you don't understand something, just comment down below and I'll either explain it there or I'll make a new video. So definitely do that because I need topics for videos anyway. But you can see here, after a huge 8-week run, the market has finally started correcting a bit. And one of the reasons why is because sentiment hit the highest level since October of 18. And that's this chart down here. You see what happened the last time it hit this level. The market just collapsed down. Now, sentiment, why does it matter to the market? Well, market prices and whether stocks are going up or down, it's all based off people's expectations. And what are expectations based off of? How people are feeling, right? Are you feeling good because the holidays are coming? Or maybe you feel crappy because you got to spend all that time with your family. It's sentiment. How are you feeling? How are their investors feeling? But this concept is counterintuitive because when sentiment gets really high, like when investors are feeling way too good, that's when they start investing too much and they start taking on leverage. They'll take out a loan and put it into the market. That's when you get the huge frenzy like we got in crypto or in 2008 with housing, where everyone's buying, everyone's getting rich, everyone's feeling way too good. And eventually they do it too much and take on too much risk. And then there's no one left even to push the prices higher, because for prices to go higher, someone has to be buying, right? But if everybody's bought and everyone's overextended, they took out loans to buy, then there's only one place for prices to go, right? Down. So when you see too much high sentiment, people feeling too good, that is a bad sign for the market. And then the opposite is true too. When people are super pessimistic, they think the world is going to end. That's when it's probably a good time to invest, because that means a lot of money is out on the sidelines, and where is it going to go? It has to go into the market, right, to push prices higher. So when you see a lot of negative sentiment, that's kind of telling you that things are just getting started, or prices can go higher from here. It's like the Buffett saying, right? Be fearful when others are greedy, and greedy when others are fearful. It's the same concept. So when you're looking at this and we're saying, okay, sentiment has hit its highest level since October 2018, well, then we're just saying there's a higher probability of prices falling from here. Now, of course, there's different levels of sentiment. Like, this doesn't mean that this is a 2008 situation. And there's also different time frames you could look at sentiment on: the short term, medium term, long term. It's a lot. It gets complicated, but that's why we just do it for you. So you can consider this short term because, like I said, the bull market is still intact. So this isn't the start of a crash or something. What we actually think, as you can see from this chart right here, is that we'll get a correction down to maybe the 3,000 level right here. And that, in the grand scheme of things, is a minor correction. It doesn't mean the bull market is over. Now, let me explain what all this means with all these lines. And the first thing you got to understand when you look at these technical analysis lines is that they are not magic. All we're doing with technical analysis is seeing where buyers are and where sellers are based on where they bought and sold in the past. These aren't the magic lines that you see Doctor Strange playing with in those movies. Those lines are actually magic. And lines you may snort off of a dirty desk, those might make you feel magical too. But these lines right here on charts, no, they are not magical. They just give us some guidance. So, okay, the first thing that happened is we had this long 8-week run up, right? Well, things got a little overextended because, as you can see here, it popped above this long channel right here. This is what we call a 6-month bull trend channel. Now, like I said, the line isn't magic or something. Prices aren't going to get rebounded right there every time. But what it does tell you is that there's a higher probability that around that level is where buyers would get a little exhausted and they might want to take some profits, which ended up happening. You see it went a little bit above that line and then started falling. There's people taking profits. And that's normal to see when you see such a strong run. The market exhausts itself and then, it starts back up again depending on the conditions. So what we're expecting is for price to correct. It's not going to go straight down. And this chart is a little old. You can already see right here, as of Thursday, things are rebounding a little bit. But yeah, it'll go up and down and up and down all the way to this 3,000 level. Not a straight drop. And the reason why we think it'll stop at this 3,000 level is because this is a large support area. It's in the middle of the channel and there's previous support levels where people have bought before. So again, the whole idea with technical analysis is seeing where people have bought and sold before and trying to use that to determine where prices would stop falling or stop rising. But after it corrects to that area and the market takes a breather, then we'll likely keep going higher. And to understand that, we got to look at the underlying conditions of the market. market. Oh, plus in December, we will probably get a Santa Claus rally like we usually do. It's positive seasonality, as they call it, in December. And actually, I think I'm gonna make a separate video on that. But again, if you didn't understand something so far, just let me know in the comments. Now, if you're watching the news, you see a lot of negative stuff about ISM numbers, this China trade deal, everything looks bad. But in fact, things are actually looking pretty good underneath the surface, but the news isn't gonna report that. So one of the most important things that we look at are liquidity and financial conditions. Now, liquidity, what is that? That just means how much money is in the market and the economy. And that's determined by a lot of things, including the Federal Reserve, which I made a whole video series about them, which I'll link to right here if you want to check it out. But the big secret is if there's a lot of money floating around, then more people are gonna spend it. Just like if I gave you $1,000 right now in your pocket, you're more likely to spend and buy something, right? Same idea applies to the markets. More money, more buying. So one of the ways we can measure that is with the Goldman Sachs Financial Conditions Index. That's this right here, this white line, and you can see it's trending down. And when it's trending down, that means that financial conditions are getting easier. There's more money in the market and economy slushing around. That means more money to buy stocks. So easing and easy conditions are good for stock prices. And you can run the stats on this, and it says that every time this index falls to a 419-day low, which is what it did just now, you usually see really good returns 1 year out, the median being 14.9%. Now that's not for sure, but again, we're just looking at probabilities here. And that just adds evidence to why this bull market isn't over. So there you have it. We're gonna see a correction, but this isn't the start of any crash or anything. Bull market is still intact. Things are still looking good. So depending on your strategy, you could use this as a buying opportunity even. But remember, we think it's gonna fall until the 3,000 level. Now, if you felt bad that you missed this huge rally right here and then you basically got in on the top where it started falling and you broke your strategy and your rules, well, then you might be suffering from FOMO. You let the FOMO take over, which is never good in trading. Like, look at this guy. He's so stressed out. He's feeling so much FOMO. Nothing's going his way, but then he read this guide and he's much better now. I don't have the after picture, but just believe me. So yeah, this is a free guide I put together on how to control your FOMO. We got a bunch of tips and techniques on how to avoid it so it doesn't screw up your investing and trading. So if you want this, just go to the link up above in this video or down below in the comments and put in your name and email and I'll send it over to you. It's all free. And like I said before, if you have any questions or want me to go over anything, comment down below and I'll make a video on it. And if you want to keep tracking the market with us, then make sure you subscribe to this channel and hit that notification bell so you get an email notification when those videos come out. I've been gone for a minute, but I'm gonna start publishing videos again, I think. Let's see. Subscribe to find out. And as always, stay fallible out there. Bye.